Al, I had mentioned at the end of the last segment, I want to analyze some stocks that are out there because we have a lot of listeners that probably invest in these stocks,
Hmm.
and we're not giving advice or anything, but I want to make sure they understand what's been happening with these markets, these stocks, and what could potentially happen in the future based on inflation, what's been going on with everything else that's going on in the world. And let's just start with our good old friend Mark Zuckerberg. We have Facebook here. I mean, roughly around the 300 mark. It's 318 as of today here.
Nobody uses Facebook, do they? That company will never make it, will they?
I heard about it today. That was the first
Yeah,
time.
yeah,
But it's been up since I guess since the pandemic lows back in March.
right.
It's been up about 125%.
Hmm.
But the past, I would say month or 2 months here, there hasn't been a whole lot of movement. It's pretty much been sideways here the past 2 months. So
Yeah,
with these markets that are just soaring up, especially Facebook, is it going to continue? But why are we seeing some consolidation right now, you think?
yeah. Well, I've got a number of things to say about that. Facebook, there people have heard us talk about the FANG stocks. You got Facebook, Apple, Netflix, Google. You throw Microsoft in there, but those are the stocks that really have driven the recovery since 2009.
Yeah.
Providing some fantastic investment opportunities, but they're all great companies. They're all innovators in a particular field or index or area. They've done extremely well, not only from an investment standpoint, but just from a growth standpoint. Now, what's happened, though, is that people relied on companies like Facebook for investments for so long that they've driven the price up to the point where all these companies that I think you're going to be talking about or mentioning are at a point where they have to start proving their value,
Hmm.
and that's kind of what's happening. I think there's some consolidation with the fear or threat of inflation coming back. It's typically these growth stocks that do not as well during inflationary periods because they're really looking at the future for their growth. A lot of their growth it maybe comes from borrowed money, which is going to be more expensive.
Yeah, and their market cap is so overvalued. They have a market cap, but their earnings doesn't really represent that. So that's
You-
why we're saying stocks are very, very inflated right
Yeah.
now. Let's
Yeah, what happens though, in order for those companies to kind of prove their value, their growth, their earnings have to increase at a very high rate
yeah.
to justify their valuation. So that's what people are looking at. But you know what? You look at how they've done over the years. Look at their growth
Hmm.
and their continued growth. So, you asked the question: is it something that will do well in the future? Absolutely. I mean, this is I think an opportune time with the technology stocks, the communication stocks being driven down the way they have.
Hmm.
This is maybe a good buying opportunity for people that didn't get in before. And you cannot count out technology, or companies like Facebook.
Yeah,
Be,
the
be,
potential is always there, Al.
yeah.
It's crazy. You mentioned the FANG stocks. Let's talk about Apple a little bit.
Oh, okay.
Apple is roughly around the same percentage gain since March of last year, the lowest from the original pandemic right away.
Hmm.
But here's an interesting thing here. Since August of 2020, there's really been no movement. It's right now, it's actually right around the same price it was in August of 2020 as today.
Yeah. And
So
it's
we're seeing
about
some consolidation there as
right.
well.
Yeah, it's about 15% off of its high. So again, that could be a great buying opportunity, unless you feel that Apple won't come out with decent new products and they won't be innovators in the areas that they're in. I find that hard to believe. They will be. So again, a
New
pullback
phones
like
coming
this,
out every day.
absolutely, and people look forward to that. And actually, with a company like Apple, just the knowledge that they're going to come out with something, the knowledge that they're going to have a press release about a new product, that's enough to drive up the price of these stocks. So you don't necessarily have to, wait until the news actually comes out. There are opportunities along the way for people that might want to be in the market for shorter periods of time.
Yeah. Well, let's talk about Netflix then, because Netflix, you would think Netflix would have soared out of the pandemic. People were home, lots of movies were being watched, all that stuff. Well, that only went up about 70%. I should say only, right? That's still a pretty darn good return.
Yeah, that's not too bad.
But if you think of it as well, since June of 2020, which is not much longer after the lows there, it's been sideways. It's been consolidating as well. So why do you think some of the tech stocks, I mean, even though the tech sector was doing great, some are doing a lot better than others. Netflix has been basically sideways and hasn't showed a lot of opportunity.
Yeah, and that's one of those companies that really relies on people spending time watching Netflix, and it relies a lot on new subscribers. Well, over a period of time, when you are bringing in the number of subscribers that they have, you reach a point where increasing that by a high percentage becomes very hard to do. So, maybe some of the glamour is gone there. And then there's always competition. Anytime you have a company like that does well, you remember a company called Blockbuster?
A long time ago.
Yeah. Well, what happened to Blockbuster?
Who's that again?
It got Netflixed.
You're right.
And people are assuming, well, they have carved out such a strong position in that part of the market. Maybe there's other people out there that will take some of that business away. So there's always that concern, but Netflix always seems to surprise people. Even when they report earnings and people are thinking they probably won't do as well, they blow it out.
Yeah. Well, the crazy thing too is these stocks that we're talking about, with the difference in returns, there's been opportunities in these sideways markets with them, but the average person just doesn't know how to capitalize on that. Mm-hmm. And when people are getting into the markets at record paces right now, they got to have the rules and the tools to make those decisions. Yep. So here's another stock, Al, I want to talk a little bit about, because it was very, we'll say, flat. There wasn't a lot of movement with this stock, and I don't know if you know what I'm talking about yet. All the way up until 2019, it was right around $58 a share in 2019.
Did it go up to almost 500?
Well, it went up to 189, and then the pandemic started. Dropped back down to roughly around 50-ish. Now, as of today, it's at about 584. Tesla.
Mm-hmm.
Now, that sounds like a pretty good return from around $50 to 580-ish or so.
Sure.
Well, it's actually about a 624% return, which is a phenomenal return for Tesla.
Yeah, but it's well off of its high.
You're exactly right. We are down from its highs from January this year, down about 40%.
Mm-hmm.
That's a pretty big haircut that people are taking that own Tesla. And I know they had a stock split at one point.
They did.
And that was possibly some of that run-up that happened because of going up to that stock split.
Yes. Yep.
But, what's happening with this one? Because, with this 40% drop, it's basically at the price it was at back in November of 2020. What's going on with that one?
Well, it got kryptonized. Elon Musk. And by the way, you don't want to bet against a guy like Elon Musk. It's people look at Tesla as being an automobile company, a car company. It really is just a real strong technology company that happens to have a car that they sell.
Did you know that Elon Musk is the Doge father?
Yes, I did. I did know that. Yeah. Well, and that's a good point, because what really has driven the price of some of these cryptocurrencies is people like Elon Musk or Mark Cuban making comments. And,
You're right.
And Elon Musk did. He was responsible not only for the drive up in price in Doge, but also for the price drop in Doge.
That's what happens when you go on Saturday Night Live. It's downhill from there.
That's why I do not go and will not go on Saturday Night Live.
You mean, do you think you're going to get an invite?
I turn it down all the time. Yeah,
okay.
Right.
It's your lie. You tell it how you want.
I just told. Oh, did I tell? Is my nose growing again?
You're Pinocchio.
All right. Well, here's the thing about Tesla. Yeah, Tesla had made a decision at one time to take Bitcoin as payment for their cars. Then they reneged on that. There's a number of comments that he's made that has caused the price of things to move along with Tesla. And there's been some issues with a few of their cars have had run-ins with things that they shouldn't have run into. Literally, yes. But that was a huge run-up in price on Tesla. And what happens is after a while, these prices get so high that a lot of people can't afford to buy shares. I mean, if you can buy maybe one share, but if you want to have a good position in a company like Tesla, if you want to have a 100-share position, it's trading at, what was it, 580 something? Well, it's $58,000 for one position. And you never want to just have one position. You want to be diversified. And that's a whole nother subject that we get into. because being in a number of different stocks is not necessarily being properly diversified. But that again is a different subject. But what happens is that people don't have the money to put a good position together, so they look at something else. So as the price of something gets higher and higher, there are fewer people that can afford to do that. In these classes, by the way, you come into these classes and we'll talk to you about a way of actually participating with companies like Tesla, companies like Apple, or even Amazon or Google for a lot less than the existing stock price.
You're right.
And we'll talk about that. And at the same time, if you're going to be investing in companies like that have high values and you have a relatively large amount of money invested in them, what's one thing that you don't want to have happen? You don't want it to go against you and lose money. So we'll also talk to you in these classes about ways that you can protect those investments so you don't have to worry about these gyrations in the market. And by the way, everybody who invests, whether you are investing in companies like Tesla or Apple or energy stocks or financial stocks, you should have a plan that is designed for you, that is customized for you, that where you should not have to think about what's going to happen. I mean, because you already prepared for it. That plan should have you, before you even get into an investment, knowing what all of the potential outcomes can be. What's the worst case scenario? And then you have a plan. Part of your plan is knowing how to respond and react to that, so you never have to be in a situation where you're going, what do I do now?
Yeah, that's a great point you brought up there. With some of these stocks, they're very expensive to some people. Netflix right around $500 a share, Tesla 580, 86 as of today. Apple is even 121, Facebook 318. People have to have that physical capital, and as Al was talking about, there's ways and techniques and strategies to participate with. You don't have to put all that capital up front, essentially. There's ways to protect that. So say people have Apple. Maybe some of our listeners have a lot of shares of Apple or Tesla or Netflix, and they want to protect their position. There's techniques and strategies to do that. Maybe even not even selling their position.
No, exactly. A lot of people have positions in stock that they do not want to sell. When I worked as a broker, I had a number of clients that had stock in companies that they either worked for or maybe even started, or that they were involved in an IPO. They didn't want to sell it because they thought there was more gain coming, more growth, but then they were also concerned because they had such a large position about loss. Well, there are strategies that can be utilized where you can still participate in the gain, in increased gains, forward gains, but also be protected. So if it goes against you, if the market turns, if that particular asset starts going down, you're already protected. So you really can participate regardless of what is happening with that particular asset.
Yeah, Al, you kind of opened a can of worms there with the Doge father, Elon Musk. I want to talk a little bit about crypto in the next segment, but also some of those other techniques that you can use with the stock market. We will be right back.